5 seconds to the open. You ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to be here. Grateful for you to be here as well. You can find us online at followthemoney.com. Great to have you. We have an exciting show lined up today. The topic is Bitcoin versus the petrodollar. Now, both of these topics are things that we have written and spoken on extensively over the years. Bitcoin, of course, the world's largest, most liquid cryptocurrency, a digital currency created in really back during the big crash of 2008. You know, what many people have called the worst economic collapse since the Great Depression. It was in the middle of that crash that a white paper was introduced by some unknown person, Satoshi Nakamoto, that created the idea for blockchain. And blockchain, of course, is the technology that undergirds Bitcoin. Now, Bitcoin is just the first blockchain app, if you will. Its currency is really just the first app. So we have blockchain technology in the form of here Bitcoin now, starting back in 2009. And then we also have the primary currency, the world's reserve currency, that is the US dollar. And of course, the U.S. dollar, if you've spent any time studying or looking at the U.S. dollar and the history of the dollar, you'll discover that it plays a major role in the global economy, particularly in the what we would call the petrodollar recycling system. And if you're not familiar with that, you can go to followthemoney.com/petrodollar and learn all about the petrodollar recycling system. And in essence, what this means is that the United States protects oil-producing countries that use the dollar for their oil. In other words, they accept U.S. dollars for their oil. It's a long con. It's been going on since the 1970s. It's really been a coup to Washington because it's created a large demand for the currency that Washington prints. Imagine having an international demand for the currency that you have the printing press for. Imagine what that's like. It's called an exorbitant privilege by many. It's considered to be an incredible advantage that Washington has in the global economy. Now, before Washington had this privilege of being able to print the world's reserve currency, you had countries like Great Britain who once enjoyed that. Back before the U.S. dollar was the reigning currency, you had the British pound. And the British pound was, of course, the world's reserve currency. And we can go back through time and we can see how different currencies have played that role throughout history. But what we see today, of course, is a breakdown of the petrodollar system and Bitcoin showing up right around this time. So it's a dangerous mix. It's a dangerous concoction, if you will, to the powers that be within Washington, because Bitcoin, when it started out in 2009, you're talking about a tiny, little, itty-bitty, minuscule, almost meaningless cryptocurrency that no one knew about. You had a few miners, either just dumb luck or brilliant people who were beginning to mine Bitcoin in 2009, 2010, 2011, 2012. And during that first 4-year period, over 10.5 million Bitcoins were introduced into the world. And right now, we have approximately around 18 million Bitcoins right now in supply, in circulation. The total, by the way, the total number of Bitcoin that will ever be in existence is 21 million. It's a controlled supply, and that number is expected to be reached by around the year 2140 AD. So we're talking, another 120 years between now and the time that the very last Bitcoin is actually mined. So what makes Bitcoin and the US dollar so unbelievably different is the fact that the US dollar is printed at will. In other words, it's not a controlled supply, it's an out of control supply. So the printing presses can run and they can create more paper money that has no backing, right? It has absolutely no backing. Does the dollar have gold backing? No. Does it have silver backing? No. Does it have any kind of backing? Well, the only backing that the US dollar has is what? The full faith and credit of the federal government. Yawn. We're talking about a $22 trillion national debt. We're talking about $120 trillion plus in unfunded obligations. We have a country that's living beyond its means. We have a country that is propped up through debt financing. Its growth is all debt financed. People point to the United States GDP growth and say, look, we might hit 3% this year. Good. How much did your national debt grow last year? Take a look at that figure and you'll find out that majority of your growth, if not all of your growth, is financed by what? It's financed by debt. So we live in an out-of-control, debt-based economy where your money is debt, where your growth is financed by debt, and here comes Bitcoin, right? Bitcoin, which cannot be printed, which the supply cannot be manipulated, which the supply cannot be outrageously inflated. And so we live now in a very strange time, and politicians are rightfully looking at Bitcoin and saying this asset is growing in power, it's growing in popularity. Now Bitcoin, as of this recording here, the Ides of May, is over $8,000, right? Even at the low that we reached back in December was around 3,500, 3,200, somewhere in there. So Bitcoin is holding well in the thousands of dollars per Bitcoin, right? Whenever it started out, it was just pennies. It was minuscule. We started hopping on the Bitcoin train back in 2013 at the behest of one of our friends, Trace Mayer, who told us about it. And we had him right here on this broadcast. And many of you who are longtime listeners of this broadcast knew about Bitcoin and Ripple and many of these other coins when they were very, very, very cheap. We've seen the price of these assets rise. What has happened to the U.S. dollar during that time? Has it gone up in value? Have you seen an increase in your purchasing power during that time? No, sir. No, ma'am. No, there's been no increase in purchasing power. It's been exactly the opposite because the powers that be erode the value of the currency. Now, up until now, there really hasn't been any kind of challenger to this except for gold, physical gold. And remember that many people started buying gold and silver in the crash back in 2008 and 2009, and we saw that peak around 2011. But what happened with silver? Well, what happened with silver is what happens with any other commodity. If we hear, for example, that there's going to be a tremendous bad crop, for example, let's just use a regular crop. Let's use a crop like corn. Let's say there's going to be a terrible storm and the corn crop is going to be very low. What are farmers going to begin sowing seeds for? Corn, right? And so as the price of corn goes up because maybe bad weather and the supply is low, well, the price of corn is going to go up until what? Until farmers can plant enough corn seeds to be able to then have a bumper crop and then meet that demand. And then finally the supply and the demand will kind of meet. The same thing happened with silver. When silver started going up to $30, $40, $50 an ounce nearly back in 2011, what do you think silver miners wanted to do? They wanted to dig more silver out of the ground, right? So the supply came up to meet that growing demand. And then, of course, kind of washed out and it kind of eventually reached equilibrium. Well, with Bitcoin, you don't have such a problem in the fact that, let's say people suddenly say, I want to buy lots of Bitcoin. I'm worried about the US dollar, or I'm worried about this and this. Well, and we've been seeing that, by the way. I mean, when you take a look at what happened in the stock market over the last couple of weeks, we've had kind of a mini little meltdown here with the trade wars. And we see Bitcoin going up in value. I mean, $1,000 a day at some point during the last couple of weeks, we've seen a tremendous boost in the price of Bitcoin. Now, what's interesting about Bitcoin is that it doesn't operate according to these other standards we were talking about. There's not Bitcoin farmers, right? There's not even the Bitcoin miners cannot go out and mine more because the demand is higher, right? Can you think of an asset today that operates like that? Can you think of any other asset today that if the demand for that asset goes up, more cannot be produced, right? I mean, even gold has a low inflation rate, but more gold can be mined out of the earth if demand goes up. Bitcoin has a controlled supply. It has a finite supply. And it has a controlled supply in the fact that only so much comes online every single 10 minutes. And on top of that, no one controls Bitcoin. There is no Bitcoin CEO. There is no Bitcoin headquarters. There is no Bitcoin committee. There is no Bitcoin board of members. There is no deciding committee that decides on all of these different things. In fact, what we have is we have a completely autonomous network that is growing and now very likely in the next few years going to pose a major threat to the fiat currencies that have been created, such as the U.S. dollar, which has been propped up through our foreign policy, through our false flag operations, through our wars that we fought all over this world. Iraq was a false flag operation, the Iraq War. We know that Saddam Hussein did not have weapons of mass destruction. We do know that he went off of the dollar standard for oil. That we do know. And we do know that they're back on the dollar standard now. And now we're not invading Iraq. We do know that Iran doesn't like the petrodollar and it doesn't like to use the dollar for its oil. And we know that the United States is huffing and puffing about Iran right now, right? So we know how the game works. What many politicians are worried about is what happens when the jig is up, right? What happens whenever the U.S. dollar actually has a real competitor? And right now, of course, the dollar can be inflated away. It can be inflated away by the monetary authorities. They can always print more. Everybody wants the dollar, so therefore they have the printing press and they can create more and more and more. This gives Washington ultimate power. And one thing we know about Washington is they will come against anything that threatens their grasp on power. Washington does not like competitors, right? It does not like competitors. It doesn't like China right now. China is competing with the United States. According to GDP numbers on a PPP basis, when you take a look at China's actual PPP GDP on a PPP basis, you'll find out that China is larger than the United States, economically speaking. They have a larger economy when everything is ironed out according to purchasing power. And the United States knows this. And the United States knows that China is not slowing. In fact, China is growing at well above 6% right now, right? That's compared to the United States growing 3% or below. That's United States has paltry growth, and they have unbelievable debts. They're the greatest debtor nation in world history. China is the greatest creditor nation, right? So United States doesn't like China. It doesn't like Iran. It doesn't like any of these nations that pose a threat to its global hegemony, to its empire around the world. Now, let me give you case in point. Here is a clip from California Congressman Brad Sherman, who has actually spoken against the Federal Reserve in the past, but now we see him actually speaking out for the Federal Reserve, worried that Bitcoin threatens to take power from the U.S. Federal Reserve. He was speaking during a recent committee, and here is a clip of his statement as he's speaking out against Bitcoin and in favor of the United States dollar. Let's roll the tape.
I look for colleagues to join with me in introducing a bill to outlaw cryptocurrency purchases by Americans so that we nip this in the bud, in part because not an awful lot of our international power comes from the fact that the dollar is the standard unit of international finance and transactions.
Okay, stop the tape for a minute. Now, basically what Brad Sherman is calling for is a banning of cryptocurrency, a banning of digital currencies like Bitcoin and Ethereum, right? This new technology that is literally threatening the powers that be and their ability to inflate away your purchasing power, their ability to erode your purchasing power through their fake fiat money that is backed up by nothing but fake promises and false promises by Washington. What they want to do is they want to outlaw, well, what Brad Sherman wants to do. I say they. Let's see how much steam this actually gains. And I should say this. We do expect this to gain a lot of steam whenever Bitcoin becomes a lot more valuable. Right now, it's still very early. Brad Sherman is early on in this fight. Let's hear what he has to say. Listen to the reasons why he gives for wanting to ban cryptocurrencies. He specifically references the petrodollar system. Listen.
Clearing through the New York Fed is critical for major oil and other transactions, and it is the announced purpose of the supporters of cryptocurrency to take that power away from us, to put us in a position where the most significant sanctions we have on Iran, for example, would become irrelevant. So whether it is to disempower our foreign policy, our tax collection enforcement, or our traditional law enforcement, the purposes of cryptocurrency, the advantage it has over sovereign currency is solely to aid in the disempowerment of the United States.
All right. So there you have Brad Sherman, Congressman Brad Sherman from California, calling for the banning. He wants to introduce a bill to ban cryptocurrencies because cryptocurrencies serve as a constraint upon America's out-of-control fiscal and monetary and foreign policy. See, Washington doesn't want any constraints upon its power. Of course not. That's why they're against China. That's why they're against Iran. That's why they're against many of these other powers, existing powers. But Bitcoin poses a really unique challenge in the fact that it's controlled supply, that it highlights for everyone the fact that there is a currency in existence that is not able to be inflated away through poor monetary policies, right? That's exactly what Bitcoin represents. So when we head into the next major downturn, which inevitably we will have another major stock market collapse, inevitably we will have another bursting of the housing bubble. If you haven't noticed asset prices, for example, they're getting outrageous in many parts of the country. If you haven't noticed the value of stock prices, they're in the nosebleed section. We are definitely overdue for another major hit. And in an environment like that, we would expect gold and silver to be beneficiaries of those poor monetary policies. But we also now expect cryptocurrencies to also benefit. And this is what guys like Brad Sherman are worried about. And we believe we're going to see a lot more rumblings ahead between cryptocurrencies and the powers that be here in the United States. The U.S. dollar is not going to go down without a major fight, and the powers that be are going to protect, of course, they're going to protect their printing press and their ability to produce the world's most coveted currency, that is the U.S. dollar. But let's get a little more perspective on this topic about where things might be heading, and this is a little clip that we have. A couple of guys spoke about this week. So you had Brad Sherman, but we also had Mario Draghi, who is the head of the European Central Bank. And he was asked during, I guess, a Q&A session, a student asked him about Bitcoin and cryptocurrencies and what the ECB's stance was on cryptocurrencies. And his answer was very revealing. Let's listen to that now. Roll the tape.
Cryptocurrencies or bitcoins or anything like that are not really currencies or are assets. A euro is a euro. Today, tomorrow, in a month, it's always a euro. And the ECB is behind the euro. Who's behind the cryptocurrencies? And so they are very, very risky assets, the value of which oscillates, as you've seen, wildly. At this point in time, they are not significant enough in their entity that they could affect our economies in a macro way.
Stop right there. Okay, so right there you hear Mr. Draghi make the very important point that we've been making now to our members for some time, and I want to stress to you here through this podcast, is the fact that Bitcoin and the cryptocurrencies at large do not pose the unbelievable threat to many of these lawmakers and to the policymakers yet, right? And this is a very important thing. We believe, and this is just an arbitrary number I'm going to throw out, but right now, if you take a look at all of the cryptocurrencies in existence, there's well over 2,000 of them that are actually listed on coinmarketcap.com. You can go check out. But of these cryptocurrencies, you have a total market cap of somewhere just south of $250 billion, right? It was actually about $150 billion earlier this year. We've seen a nice rally in cryptocurrencies, but we're up to about, $250 billion in total market cap. Now, obviously, that is not very much, right? That is pretty small when you compare it to the market cap for gold or the market cap for stocks in the United States or whatever. This is very, very small. Very, very small. I mean, it needs to be stressed. Very small right now. This is the infancy for many of these cryptocurrencies. However, that being said, Mr. Draghi made the very strong point that right now they're insignificant. But that will not always be the case, in my opinion. I believe that we're going to see, let's say that cryptocurrencies as a total reach $1 trillion in market cap. That could happen. In fact, when we had the big 2017-2018 bubble, we got up to around $800 billion in total market cap. So we were getting really close to that 1 trillion area. I believe when we cross $1 trillion in total market cap, and especially if Bitcoin itself were to cross that number, you would have guys coming out of the woodwork, policymakers and lawmakers, trying to stop this. So I think what I'm trying to tell you with this podcast today is that right now we don't face the big global battle between Bitcoin and the petrodollar that we are going to face. Because if Bitcoin continues to rise and it continues to gain more trust and it continues to gain more faith from the people, then it's going to automatically disrupt the current system. And that, of course, will be devastating to the lawmakers and policymakers who continue to print funny money and to erode the purchasing power of everybody's currency. Let's play the rest of Mr. Draghi's comment here. Let's roll the rest of that.
And so we tend to consider them as speculative assets, highly risky. But as far as the rest is concerned, it's not really something that pertains to the central bank, the task of monitoring and regulating possibly this. It's more, what I would say, more something that falls within the consumer's protection competence, where you want to make sure that people who buy into these assets know what they do and are aware of the risks they run.
I totally agreed. I think that there certainly needs to be some aspect of, oversight over what's happening here. I don't think that you're going to be able to get away with the fact that governments are not going to create some oversight. I think that's just simply going to happen. But it's interesting that Mr. Draghi is kind of passing the buck here. He's saying it's not the central bank's job. I think the central banks will change their tune again whenever Bitcoin is maybe worth $1 trillion in market cap, or whenever the total basket of cryptocurrencies reaches that number. It's just simply going to be a headline that's going to stoke a lot of angst, I think, within Washington, within Brussels. We're going to be watching this story for sure. And by the way, we just did a private group coaching call for all of our members, all of our gold and platinum members on Tuesday of this week. And we talked about the upcoming Bitcoin halvening, and we really spent some time on that. And that kind of explains why you see the price of Bitcoin moving right now. We believe right now we're about 1 year out from the next halving of the miner's reward for Bitcoin. That is to say that Bitcoin, ultimately, the Bitcoin network ultimately runs upon machines operated by miners, and miners serve the vital function of grouping and recording blocks of user transactions onto the blockchain. And in exchange for that work, the Bitcoin protocol dispenses a reward in the form of Bitcoin to all miners who collaborated on that block, and that happens every 10 minutes. So every 10 minutes, a certain amount of Bitcoin come into existence through the process of mining. But also built into Bitcoin's protocol is a systematic halving of the total mining reward that is dispensed every 10 minutes. And this halving effect occurs around every 4 years. It's not exact. It's actually every 210,000 blocks that are grouped and recorded. Then you have a halving. And this is supposed to happen regularly every 210,000 blocks until Bitcoin is fully mined sometime around 2140, I should say. And so when Bitcoin was born back in 2009, the total reward that was spit out to miners every single 10 minutes was 50 Bitcoin. That got halved back in 2012. And so if you look at that halving event back in November of 2012, you'll notice the price started going up into the halving, and it went and have a pretty explosive run a year after the halving. The next halving occurred in 2016. It was in July of 2016. That was the second halving, and that slashed the total reward for miners in half again. It was split from 50 to 25 in 2012, and then it was split to 25 down to 12.5 back in 2016. So right now, as of this recording, every 10 minutes, 12.5 Bitcoin come into existence through the process of mining. But in 2020, May of 2020, around May 23rd, that's halving is going to occur again. And so typically 12 months before the halving occurs, in this case, the next one is going to be May 2020, you start to see a slight elevation in the price of Bitcoin. And then after the halving takes place, what we see is typically a major run. Remember, the last halving was in 2016, and then the next year we had this massive bull run, right? And so we tend to see a lot of price movement around the halvings. And so we went into detail about that for all of our members. We try to keep them on the cutting edge of what's actually happening, ways that they can make money, from all the chaos and confusion and, quite frankly, the exciting things that are happening around us each and every day. By the way, one more comment here on cryptocurrencies. There is a brand new network called the Flexa Network. We're going to put a link to it in today's show notes. The Flexa Network just recently launched with more than 30,000 stores. And this Flexa Network is a built from the ground up ability, a network, a payment network that allows you to walk into major stores like Whole Foods, like Starbucks, like Nordstrom's, like Crate and Barrel. I mean, we can go down the list and think of some of these really big companies that have signed on to the Flexa Network. And you can walk in, Baskin-Robbins, and you can walk in and you can use the app to pay for your stuff with Bitcoin. It's all done. It's already set. These stores are already accepting it now. So Bitcoin comes to Whole Foods. That's an Amazon-owned company, by the way. And many, many other retailers, over 30,000 stores now ready to accept Bitcoin as payment, not just Bitcoin, a few other coins as well, as payment for their goods and services. This is coming. The demand is there. Now remember, Bitcoin only has 21 million total supply. And unlike everything else out there, there's no producer of Bitcoin that can go out and say, oh, look, everybody wants Bitcoin now. Let's go produce some. Let's go print some. You can't do it. You can't do it. You can't print Bitcoin. You can't create it out of thin air. You actually have to mine it. You have to mine it, and it gets more difficult and more difficult and more difficult as time goes on. And this is what many people who have bought Bitcoin early on and many other cryptocurrencies, this is what they understand, the finite nature of cryptocurrencies in a world where everything is viewed as infinite, right? We just continue believing that the present must be the minimum. We continue to see the price of everything go up. Inflation is going up constantly in many different, many different costs of the things that we have to bear. Our healthcare costs are going up. Stamps are going up. Food costs are going up. Everything's going up. And that's because we have a corrupt monetary system. It's because we have a monetary system that's prone to inflation. But Bitcoin nips that in the bud with a controlled supply. Very powerful. And the powers that be know it. And they don't have an answer. This is kind of like a forced gold standard upon the powers that be, and they know it. So I'm not here to tell you that Bitcoin will be around 100 years from now. I'm not here to tell you that any cryptocurrency will be around 100 years from now. I don't know. In fact, I'm of the opinion that the battle that's going to ensue between cryptocurrencies and the powers that be is going to be pretty brutal. But we're not there yet. Just as you heard Mr. Draghi say, it's insignificant right now. It's a drop in the bucket. They're not worried about a $250 billion market cap. It's too tiny. They're not going to spin their wheels trying to fight it. They'll only make it bigger if they do that, right? If they began to give lots of attention to Bitcoin and talk about it all the time and say how bad it was, they would only drive people to it. They're playing their cards pretty smartly here. However, when and if the price of Bitcoin and other cryptocurrencies continues to elevate, and it finally reaches an area where it becomes a real problem, you're going to see, I'm almost willing to bank on it, you're going to see a lot of lawmakers and policymakers suddenly grow a spine and suddenly begin to say, you know what, we don't want this. And they'll begin to crack down. So in other words, for those of you who are cryptocurrency investors, I would certainly not want you to think that it's all smooth sailing ahead. This is going to be a big, big battle between the powers that be, who do not want to lose their printing presses, and a brand new technology that is very promising, but yet at the same time extremely threatening to the powers that be. So my advice is to buckle up. If you're a cryptocurrency investor, get ready. May not come this month, and may not come this year, but soon and very soon, the powers that be will be coming to stop the advance of cryptocurrency. Who will win in the end? The powers that be or the power of the people? We'll find out, won't we? We'll find out soon enough.
To go out on a limb and make a bold prediction. The 2019 Follow the Money Summit is likely to yield more financial fruit for attendees than any other activity throughout the whole year. Hey guys, it's Jennifer Robinson, and I want to personally invite you to join us on Friday, May 31st, 2019 at the Embassy Suites in bustling Rogers, Arkansas to see Jerry, myself, and a host of exciting speakers. Many of our listeners have shared how attending the summit in the past has been the catalyst for breaking free financially. With a powerful lineup of speakers, teachings, and breakout sessions, this year's summit promises to be the most powerful yet. At this year's free live event on May 31st, you will be able to network with like-minded people and get motivated to break free financially. You will even have the opportunity to meet Jerry and me, even have dinner with us at our optional evening event. You can also attend our next day event on Saturday, June 1st. This optional event is our powerful trend trading boot camp, an all-day intense training for those wanting to trade stocks for profit. Get your free summit ticket at summit.followthemoney.com now. There, you can choose to add one or both of our optional events as well, including the Trend Trading Bootcamp and the special evening with Jerry Robinson and myself. Learn more online at summit.followthemoney.com.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, welcome back to the program, friends. Great to have you along for the ride. We are in the final segment now of today's broadcast. And I want to leave you, as always, with a final word. And this time it's a slightly different final word. And the fact that we are dealing with something very, very major here in the United States, and that is overspending. It's been going on for a very long time. It doesn't matter which president you look at, whether you look at Ronald Reagan, which, tripled the national debt, or if you look at George Bush, who also helped both junior and senior, which they helped the national debt go higher. Clinton saw the national debt go higher. President Obama saw a doubling of the national debt. And, of course, President Trump, we're seeing this tremendous skyrocketing of the national debt. In fact, here's a headline from CNS News that says the federal government spending sets record through April. Have you noticed that everything has gone dark and everything has gone quiet when it comes to the outrageous level of spending in Washington? Have you noticed that? It seems as if whenever you open up the 401k statements or you open up the IRA statements or you see your housing value is going up, this is called the wealth effect, and it tends to make people forget that the stewards in Washington who are supposed to be stewarding our finances, our national finances, are actually recklessly overspending. So it often takes people to get out in the, it often takes a cutting of your 401k or an IRA for people to get upset. Otherwise, they just think it's fine. Doesn't matter if there's record overspending. What do they care? Because their 401k and their IRA still looks like it's growing, and that's all that matters in the end. And that's not true. In fact, let me read you a little bit of part of this story. It says the federal government spent $2.57 trillion in the first 7 months of fiscal 2019. That's October through April, setting an all-time record for real federal spending in the first 7 months of the fiscal year. That's staggering. So my question to you today in this final word is simply this. Where is the Tea Party? Where is the Tea Party? Do you remember the Tea Party going nuts back in 2009, 2010? People were so upset and outraged about a $9 trillion national debt. You remember that? Do you remember that? It was $22 trillion now, but that doesn't matter anymore, does it? It was really upsetting because it was $9 trillion. Do you remember that? Do you remember whenever people actually were very outraged about the out-of-control spending in government, the bailouts? And yet today, the corporate bailouts continue. We have bailouts of farmers. We have bailouts of across the board. We have so much unbelievable corporate welfare that it's outrageous. And yet the Tea Party has gone dark. The Tea Party has gone silent. You know why? Because the Tea Party was never really about overspending. It was a political maneuver. It was not actual fiscal responsibility that the Tea Party wanted. It was all about politics. And that's why they're not here. Because if people actually cared about overspending, then they would be out in the streets right now, because we have never had more overspending than we have right now at this very moment. And the fact that the Tea Party is silent, and the fact that there are crickets, and no one in the Republican Party is screaming at the top of their lungs about the overspending in Washington, tells you all you need to know. It tells you that everything that you see is driven by politics and not by principle. And that is just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors are their own and do not necessarily represent the views of ftmdaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.